Hello and welcome to this week's audio blog from Innecto Reward Consulting. You'll be hearing from rewards consultant Emer Bucukoglu, who'll discuss what we've learned from year one of gender pay gap reporting, the good, the bad and the ugly. We'll finish up by exploring 6 key lessons from the process and what they mean for reporting in years to come. First of all, welcome Emer.
Hello.
Emer has over 20 years' experience in rewards and manages Innecto's team of analysts. Equal pay is one of her specialisms, having worked on many equality audits in the past decade. More recently, she has managed the analysis and delivery of the UK gender pay reporting requirements in Year 1 for numerous clients and continues to work with these companies in their Round 2 reporting year. Recently, Emer was invited as an expert speaker at a new cross-party group on workplace equality at the Oireachtas, the Irish National Parliament. She offered insight and advice from Innecto's experience with UK gender pay ahead of the introduction of similar legislation in Ireland later this year. So Emer, how was your presentation at the Oireachtas?
Well, firstly, let me say that presenting in Leinster House is not something you get invited to very often, so I was very honoured to be invited to speak there, and I must say there was a terrific buzz about the event.
What sort of people came?
It was attended by a mix of politicians and industry stakeholders ranging from HR directors to heads of business. It also got a lot of interest from trade unions and the education and training sectors. So just to give you a bit of background really, the event was the official launch of the cross-party group on workplace equality, which was established by Sonia Lennon, the founder of Dress for Success, and chaired by Senator Lorraine Clifford Lee. So Dress for Success is a charity based in Dublin that provides career development tools and a support network for women entering the workforce. So they support women with professional clothing as well as skills and development opportunities that will help them get into employment and ultimately achieve success. So what was startling really for them was encountering firsthand many of the obstacles their clients were facing when entering and progressing in the workplace. So for the past 3 years they've run an equal pay campaign, and the cross-party group emerged as a result of this. Ultimately the aim really is to raise awareness of the inequalities across organisations in Ireland, and a key part of that is pushing for legislation that introduces the mandatory gender pay gap reporting as we now have here in the UK. So the gender pay gap in Ireland is not as high as that of the UK, but it still stands at 13.9%. So like the UK, there is work to be done to reduce that.
So how did the audience react to what you had to say?
Well, the overall theme of the presentation was focused on what Ireland can learn from our experience here in the UK. They were very keen to hear firsthand about our experiences of gender pay gap reporting in Year 1, both good and bad, and really to understand how we as reward practitioners helped our clients get through that first year of reporting, not only in terms of the technical aspects of the reporting, but also how we helped them develop and communicate a compelling story really around the results. So industry leaders in Ireland recognise, just as we do here, what this has done for the UK, and they're very keen to start the sorts of conversations that UK companies are having and the initiatives that the UK companies and changes that they're implementing as a direct result of this legislation.
So based on your talk that you did and also your work with Innecto's clients, what would you say are the positive outcomes of the reporting?
There's plenty. I think the compulsory reporting by named company is a pretty radical and impactful decision by the government. If you look at the reporting requirements of other countries, the UK sits alone in mandatory publication by company. Australia, for example, it's seen as a global standard for gender pay gap reporting, but they haven't chosen to go down this route. They've chosen to report on generalised industry pay gap data, and they'd admit themselves that closing their pay gap has been quite slow. So I think that's a positive outcome. The reporting is also set out what the government aimed to do, and that was they always wanted to increase the visibility of the gaps and bring the issue out into the open. So we would say, the mandatory reporting, the headline figures, yes, they're focused on pay, but really it's about representation. And these figures are just the start, is that initial catalyst to find out whether a company is actually hiring fairly, paying fairly, and, are they offering equal opportunities for all to advance. I'd say a really positive outcome also is that it is putting gender pay, or it has put gender pay on the senior team's agenda. The fact that companies have to update annually means that this isn't going away anytime soon. So as a direct result of the pay gap analysis, lots of companies are looking to understand the causes of the gap. And this might be looking at things like women's career flows, or aspects like promotional activity, or take-up of development and mentoring schemes, looking to see if their policies and practices are maybe stacked against women. That again has been a very positive outcome. I would say also because the media has put the spotlight on very high profile organisations, honing in on them where reputational risk is at stake. I think that's propelled companies into not only getting their stories straight, but it's really forced them to look into those dark corners where previously they would have ignored. And I think in the long term, that will have a very positive outcome. The other positive, very tangible results of this first year of gender pay gap reporting is that more and more research is being conducted from all strands of society into what might be causing the gap. So I think it's touching so many aspects of our lives. Again, a very positive outcome in that sense. And finally, I would say it's been a great opportunity to educate the general public on the difference between the gender pay and equal pay concept. So one of our key pieces of advice to the cross-party briefing was the need to make sure that employers and policymakers and the general public are very clear about the difference between the gender pay gap and equal pay. Within the UK, I would say there was and still is a wide misperception that the gender pay gap reveals pay discrimination, which of course we know is not the case. Those companies who've chosen to go beyond the minimum reporting requirements, they took that opportunity to explain the differences between equal pay discrimination, which of course is against the law, and their gender pay gap. So really, I think that's been a really positive outcome. Anything that moves that conversation on and educates is a great thing in my book.
Okay. So that's all the positives, plenty to go on. Were there any bad outcomes or criticisms you might make of the requirements as they stand?
Well, I suppose with the implementation of any new regulations, there's always going to be some teething problems in the first year, and this was certainly no exception. So without going into massive amount of technical detail, there's certainly some criticisms and changes that we think should be applied for future reporting. We certainly felt that the late announcement of the regulations and the very detailed methodology around complying with them led to a sense of panic amongst companies. And the fact that there was further amendments made very close to the go-live date, that just caused quite a bit of anxiety amongst our own clients and frustration that they had to get their houses in order quite quickly. So thankfully we're now in year 2, and I'd say the majority of those issues have been ironed out, but that could have been dealt with a little bit more efficiently, I think. I think the requirements of the reporting are a little bit confusing, and I'll go on to talk about that in a bit, but I certainly feel that there are lots of easy mistakes to make with this type of analysis, and the repercussions of getting it wrong, they can be pretty significant. Another criticism I'd say is that it did take companies a long time to prepare the data. So a general underestimation by many companies as to how long the process of data gathering and cleansing would take. You've, for example, got to source multiple sources of data. You're looking at large swathes of your remuneration elements that have to be categorised into the right buckets for analysis. So not all companies have that sophistication. And indeed, we found, many inaccuracies in payroll systems. So they do need lots of support from multiple sources to combat that. I would also say that the fact that there was a high error rate in the results published. In fact, just last week I was looking at an article announced by the Equality and Human Rights Commission. They're writing to about 20 employers over what they describe as dodgy data. Now, our experience here at Innecto, we didn't encounter much of this, but we did validate data where a number of employees across, for example, the quartiles hadn't quite balanced out, or where a small error or incorrect exclusion resulted in their mean and median gaps being slightly out. So as I say, we haven't firsthand seen many of these reported errors, but the EHRC would suggest it's a bigger issue than maybe they'd initially envisaged. I think really the ongoing challenge is that the process of verifying data from companies is not particularly sophisticated. So in reality, it's probably only those companies that have odd-looking results that will be chased up, and that's not necessarily a guarantee that all offenders are being captured, so it's a difficult one. And finally, I would argue it's not necessarily a bad outcome of the gender pay gap reporting, but it was disappointing to see so many companies leaving it really late to publish. So half of the firms reported in the week leading up to the deadline, and lots were scrambling to get the reports in ahead of the midnight deadline. An interesting 1,500 reported their pay gap figures on the very last day alone. So lots of people really left it till the last minute and left the reports until maybe their peers within their sector also reported theirs, perhaps hoping to hide under the radar of the bigger names. So that was a little bit disappointing, but hopefully that will change in the forthcoming year.
Okay, so we've done the good, the bad, and now the ugly, or rather
Yes.
the nitty-gritty, the technical detail,
Yes.
which is your area. So what are the key technical observations that companies should be aware of when they're preparing their data and their narrative for year 2?
Sure, well, we worked on so many reports this year, which was great. And so we got very close to the technical detail of the regulations and the methodology. We found ourselves questioning the logic, I'll be honest, of some of the key calculations, and we would concur with a lot of our colleagues in the industry around the issues that they had with the basic methodology and framework. We're actually hoping the government might change this in subsequent years, but for now, I would say we need to highlight the following issues. So, for example, the legislation says that employers have to base the gender pay reporting figure on pay after salary sacrifice deductions. So, employers really on the whole, and our clients included, would say it's easier for them to base it off gross salary. And that's actually fair because it doesn't impact any decisions taken by employees to sacrifice pay. We wholeheartedly agree with that. It just feels counterintuitive to use a figure which is not in the control of the company. And I'd also say that employees, they do typically salary sacrifice for things that the government encourages them to do, for example, a pension or childcare. So there's the worry that companies, they could even reconsider offering such schemes if it negatively impacts their headlines. So I'd say there's still room for misinterpretation around the salary sacrifice rules. And I'd say that some people, organisations may still be reporting incorrectly around that. Secondly, I'd say the whole aspect of the working variable hours. We found a lot of our clients really struggled to work out the average number of hours for those who were working perhaps on 0-hour contracts or casual workers. And we just think that calculating the average over 12 weeks actually seems excessive when you can actually calculate the hourly rate much easier by using the hours worked during the pay reference period. The bonus gap is a big bugbear of ours, and I think a lot of experts in the field would agree. So as we know, the bonus gap calculation is based on actual amounts, which is inconsistent with the calculation of the ordinary pay gap. So essentially you can't really prorate them for part-time, which means that even if a man and a woman get the same percentage bonus award, if the woman works a shorter week, well, of course her bonus is going to be lower. So because of this, the reported gaps are actually much higher than the ordinary pay gaps. And the media are having a field day on this aspect. It's almost detracting from other headlines. Other issues I think we had with it was the regulation stipulating that each individual company within a group structure needed to report individually as a separate entity. In practice, that actually means that some companies within a group were caught, but some companies were not because they managed to get under the 250 threshold. So that perhaps needs to be looked at going forward. And that really is, I'd say, there's plenty of other technical nitty-gritty observations we could make, but they really were the key ones that stuck out as far as we were concerned.
So if you had to pull out key lessons from your and Innecto's experience of year one gender pay reporting, what would they be?
I would say the fact that we're out the other side of year one, and so we know the gender pay gap reporting has resulted in as many questions as it has answers. The media spotlight is well and truly on, and the scrutiny has increased, which means there'll be even more emphasis on, well, not only the act of submitting an accurate report, but also the supporting narrative, and most critically, the action plans to reduce the gap. So on that basis, I would say from a learning experience, we need to continue to educate. I know we are in year two, but you would be surprised at the continued level of misinterpretation around equal pay and gender pay. So as we know, it is not about unearthing pay discrimination, which is equal pay and illegal. Rather, it's about highlighting the pay gaps in a bit to understand those typical contributors of these gaps, whether it's sectoral bias or unfair pay mechanisms, lack of equal opportunities to advance. We just need to be clear about the differences between those two concepts. I would say do not underestimate the importance of the narrative. We saw firsthand how much the narrative grew in importance as companies understood the impact of the announcement. We certainly saw real differences in the quality of the narratives, and having read many reports myself, I would say there are some fundamentals that the better organisations included in theirs. Things like an acknowledgement of the gap. So a message from the CEO is vital, in my opinion. So the most compelling narratives that we saw were the ones that were honest and faced up to the results. I'd say absolutely give as much context and insight, go beyond the basics and conduct some deeper dive analysis. That might be anything from looking at gaps in functions or going on to much more tailor-made metrics. So looking at invisible reasons that may drive gender pay differences over time. So, what do you do if you've got lots of ad hoc pay rises outside of the general pay review cycle? What's the gender split between the starting salary of newly hired employees over your past year? What's the gender split of your promoted employees over the last year? I think This type of analysis is a real game changer, and for our clients, the ones that conducted these types of analysis certainly gave and were able to provide a much richer narrative. I would say also you need to make references to the differences between your gender pay gap results and what your equal pay position is. So a proactive organisation will have already carried out a much deeper dive analysis to ensure that they are fully in the picture of any equal pay issues. At the end of the day, you cannot confirm that equal pay is not an issue for you without going beyond that headline analysis. Make sure you tell some good news stories where you can. It's not all doom and gloom. Many companies with large gaps recognise a whole host of reasons as to why they are where they are, and they see gender pay gap reporting as that first concrete confirmation of the issue. So whilst there's plenty of work to be done to affect the change, I think it's a great opportunity to highlight the good work you're already doing or around inclusion and in diversity.
And so in terms of other recommendations you can give to people, there was a huge amount of media interest. I know a lot of companies were scared or apprehensive about that. Is there a way that they can mitigate or head off negative press coverage?
Absolutely. I think it's critical when you build a narrative that you're sending the right messages to the right audiences. So it's very important to get your employees as well as the external customers and the general public and media to get that message. We felt it was very important that employees understood the complexities of their own company's pay position, and also a demonstration and commitment by their employer that they were committed to ongoing inclusion and fairness in the future. We would say that a real game changer in all of this is having a set of published tables, so being able to access online detailed gender pay gap reporting by company. And I would say that most of our clients in year one had significant overall pay gaps extending beyond the national average. And I'd say that they weren't really fully prepared for the scrutiny of their figures by the public and the media. But we do believe that the publication of these tables by the government was a good decision. I would say as practitioners in the field, we see mandatory reporting by company name as a key driver really in accelerating the closure of the gender pay gap through increased visibility really and accountability. And finally, I would say a key lesson for our clients and organisations embarking on year two is to ensure that they paint a picture that's easily digestible. So it might seem like a bit of a luxury to have good visual infographics, but really that's the sort of thing that will help people understand, digest the figures and grasp what they're reading. It's just really important that people get it. So there was a piece of research commissioned recently by the Government Equalities Office on the public's understanding of the gender pay gap. It was a very interesting study that suggested that there's an optimum way of presenting the gender pay gap figures that would enhance this understanding. Their overall conclusion was that the figures should be visually represented as and described to the public in terms of money, for example, rather than percentages. Whilst that seems like a small change, I think companies need to perhaps read that study and take heed of it in presenting their analysis in year two.
So thanks very much, Emer. Some really great insights there. And if you'd like some more detail, or you hear what Emer's saying about needing extra help with technical observations or narratives, then give us a call or email Emer directly. Thanks very much, and we'll see you next time. Bye-bye.